Welcome. My name is Christina Sewick, and this is the Mindstrength podcast. I am here today with my inaugural guest, John Cassels with My Hub Mortgage. Thank you so much for being my first guest today, John.
Well, hey, thanks, Christina. Appreciate being the inaugural guest and look forward to many more. So let's see what we can do today to help everybody out.
Yeah, I'm really excited. So you're first, let's tell people a little bit more about you. You are in the mortgage industry for how many years?
23 years. We're with the Mortgage Hub, and it's been a long journey, but a great ride.
That's amazing. So you've seen a lot of things in those 23 years, I would imagine.
A few up and downs, yeah.
A few up and downs. And just to tell everybody real quick, you are able to help people in Arizona and in Washington State,
That's correct, yeah.
Awesome.
Yeah, we've been doing loans in both states for many years.
And today, what do you think about the market right now? I know that 2023 was a little bit interesting for everybody after that ride of, the 2021 mortgage rates. And what are you seeing out there today?
Well, there's a shift. I mean, we've had some great news, even though it's not the news everybody, wants to hear. But the Fed's really changed their directive on, what they're looking at doing with interest rates. We're not raising rates anymore, so that's a positive sign. Typically about 9 months after the last increase, we start seeing cuts. So with that, mortgage rates will start coming down. And so we're already on that trend, and we're looking forward to 2024 to seeing a couple cuts come.
Now, I heard somewhere, and I think it's misinformation, but I wanted to touch on this real quick. I've been seeing on social media a little bit that, the Fed said that, we're going to cut rates 6 times this year. Can you debunk that a bit for us, please?
Yeah, so really, like you said, it's kind of misinformation. Mm-hmm. What's happened is that the Fed announced that they were going to look at cutting rates up to 6 times. So that means that, like, in their meetings over 2024, they were going to talk about should they cut rates, and that's really going to be based around what's happening with inflation. The Fed has a target goal of 2%. So as they start getting closer to that, we'll start seeing those Fed cuts. That's probably not going to equal 6. It'll probably be a couple less than that.
Okay. And when do you think that we're going to start to see our first cut maybe this year? Do you think
that's like I mentioned, usually about 9 months after that last increase. So based on where the timeline is for that, we'll probably see summer of 2024 where we'll see the first cut.
Okay. And do you see more applications coming across your desk right now than you did, let's say, 6 months ago?
Oh, absolutely. The positive thing is the mortgage rates move in advance of what the Fed's doing. So we've seen, just with the information coming out that the Fed was going to cut rates, that's already affected where mortgage rates are. Mm-hmm. So we've seen the activity pick up. I mean, we've been up anywhere from probably about 15 to 20% more loan applications since the beginning of the year. So that's a positive sign, especially, going into spring. That means that those people, usually we start seeing applications increase about 90 days before people actually start buying. So that's a positive sign especially for spring and summer coming up.
And you saw that pick up sort of late last year. When did you see that?
Yeah, it was just right at the end of last year, beginning of this year.
And you think that this year already it feels like it's going to be a better market than last year? It feels more positive is what I think I'm getting from you.
Yeah, I'm hearing a lot more positivity from buyers. Before it was, well, I don't know if I can afford anything. I don't know if there's enough houses out there for me. Now it's, what can I afford? What can I buy? How do I qualify? They're starting the conversation a lot earlier than what they have been. So I think that's a positive move for, what's going to happen with the housing market.
So that brings me to a question I was going to ask you. When is typically a good time? Like, if I want to buy a house, should I start talking to you a week before I want to buy the house? Or should I start talking to you a year before I want to buy the house? Kind of what is your kind of guideline on that?
Really, as soon as possible, because you may have a good credit score. Or you think you have a good credit score. Maybe we can help increase that so that you can get a better rate or qualify for other programs. So, the sooner that you can start talking to somebody about the programs and, help budgeting. I mean, if, for example, like if I was paying $2,500 a month for rent right now, but if I found out that my mortgage payment was going to be $3,500, I could actually start preparing for that by continuing to pay my rent at $2,500, put that extra $1,000 away in an account, and really just get used to paying that mortgage payment in advance. So it's kind of, like muscle memory at that point. So the sooner that you can, figure out like what you're going to qualify for, the plan that you're going to use, programs, that's the best opportunity for somebody that's looking at buying.
So if I'm thinking about my rent's $2,500 a month right now, and the house that I really want to buy, price-wise, the mortgage on that's $3,500. I should take 1,000 of that and start putting it away in savings.
Yeah,
That's
why
a really
not?
good idea.
Yeah, why not get used to making that payment now instead of, waiting until the very last minute? I mean, you have a little extra money, maybe, with closing costs or down payment or just, having that muscle memory of making that payment per month. That way you don't have that hardship once it's time to actually start making the mortgage payment.
That's a really good idea. Now, what sort of different loan options do you have right now? What are some of your favorite products that you offer that maybe you want to tell us about?
Yeah, so we have the traditional, like conventional VA, FHA loans, but on top of that, we also have some non-traditional loans. What we call non-QM. We're seeing a uptick in a lot of those programs being used because before, like for most self-employed people, you had to have tax returns, and not everybody's been filing their taxes, or they're behind, or they have an extension in. So these non-QM programs have opened the door for self-employed people that may thought that they had to wait to get their tax returns done. So we can use like bank statements or 1099s, some options for P&Ls, or just some creative programs that are available out there that they can actually go out and buy houses now instead of having to wait for those tax returns. So that's something that we've really seen being utilized. The investors, really, they have a program that's a debt servicing program that if the rent payment covers the mortgage, then with the right down payment, we could help them buy an investment property.
Oh, that's really fantastic. And if you're self-employed, how many years do I have to be self-employed in order to come to you and say, can I do a statement, an income statement loan? Or
there are programs where it's a little as 1 year.
Oh, wow.
But typically it's a 2-year requirement to have the business. So there's some alternative programs that'll allow, like if you've been in the business, let's say I was like in the service industry and I was a salesperson and I went on and started my own company, but I had a history of working in that industry. Potentially I could do it with 1 year's worth of being in business.
Wow. That's really fantastic. Okay, so what if I'm a person that's maybe a sales manager, but I'm salaried, but I'm at, I don't know, working at X job, but I want to I'm getting a really great offer to go work for another company. Is that okay? As long as it's the same line of work, or should I not do that?
Yeah, that's
what's
a
your
great
guideline
question.
on that?
So usually, if you change positions or change companies, we just want to be able to make sure that we can verify, what the income is. So if you're on salary and it's just maybe an upgrade in what your salary might be with the new position, that's a great move. We just have to be able to document it. Where challenges come in with income is that if you're commission only, or you get paid based on like proration or shift differential, there's some challenges with making sure that the income's going to stay the same if you move. So if I worked at a hospital and I went to another hospital, but they paid differently, we just really kind of have to dive into that. So again, if we can have as much advance notice in getting you a plan put together, that's really going to give you, really the best steps to be able to qualify.
Oh, that's great. Now, kind of, where do you see, I know we touched on it a little bit at the beginning here, but where do you see kind of the market ending up this year? Do you think if you're a buyer right now and you wanted to jump into the market, you're going to have a lot of equity maybe by the end of the year? Do you think it's a good time to jump in?
Well, that is one thing, is that the rate of appreciation, is expected to continue to go up. It's a smaller number than it has been in the past, but, house prices are still going up due to low inventory. So, the best time to buy is, 10 years ago. But,
Right.
If you're not, and if you haven't bought, then, then let's look at what your options are and see where you're at. Because, if we can get you into a house now, then you'll be able to take that opportunity for the equity in the house to go up more over the next few years.
Now, if I'm buying a house, I'm excited. I want to get the keys. I'm looking forward to closing. What are some things that I shouldn't do once I go under contract? Like, should I go out there and buy the furniture, and it's a really attractive, they have a great furniture, credit card that I can go get to get that lovely furniture over at Living Spaces or wherever you want to buy it from. Should I do that, when I'm still in the process, when I'm close to closing? Is that going to mess me up at all?
Yeah, those are what we call the do's and don'ts.
Okay.
So, yeah, do not change jobs like while you're under contract. Do not go and buy a new car. Do not go open the Home Depot account because you're excited that you're under contract and you need a new washer and dryer. What happens to that is that, we're verifying up front that you can afford the house. So we're looking at your debt to income ratio. You make changes to that debt to income ratio with a job change. So then there's might be income change, or with your debt changing because you've taken on a new debt. That could actually disqualify you for the house. And
even though you've already taken a look at everything, I've already been qualified, that's going to mess me up right before closing.
Absolutely, because we're looking at those numbers and that information all the way to the day that you sign and get keys.
What if I've been making my credit card payments pretty much on time, but I miss a payment when I'm under contract? Is that going to mess me up?
Potentially. It just depends on when the reporting is done. I mean, typically we don't pull a brand new credit report. We do verify that there is no new debt taken on. So it just depends on in that time frame if the credit report company updates the credit report and it's reflected on the report that we get.
Okay. So try to just keep everything just exactly as it was before I met you and we started talking. Just keep everything. Don't do anything different.
What I like to tell people is live a boring life for the next 30 days while we get your deal done. Because if you go out and that excitement gets the better of you and you decide to make a mistake, if we can't fix it, then, that could really, it not only affect the buyer, but it affects the seller, so there's more than just the buyer involved in that. So we want to make sure that we do everything we can to get the transaction closed.
Okay. Is there anything about a loan product that we haven't talked about that you really want to bring up and highlight?
Well, I mean, there's, part of the loan process is just really making sure that, we're looking at a strong application that's getting, employment details for the last 2 years, typically, finding out assets, finding out about the credit, finding out, was there a bankruptcy? Was there alimony, a divorce? Is there any federal loans that have to be paid? Taxes that are owed to the IRS. So, getting that information up front, and then allowing us to really kind of walk through and figure out what your goals are, that's gives us the best opportunity of success.
And if I know credit's important, but if I'm thinking about, gosh, I really want to try to get the best credit possible, kind of where do I need to be to get the best interest rate for myself?
Well, it does depend on the loan programs, but typically, the highest tier is 760 and above. So that's like the pinnacle of credit, when it comes to evaluating interest rates. But that doesn't mean that you can't get a great rate with a lower score. It just depends on the loan program. So really, that's, again, something that we want to look at, is it an FHA loan that we can do, or is it a conventional loan? Or, if you're a veteran, can we use your VA benefits? Because sometimes those alternative programs actually will offer a rate that's comparable to somebody with a high tier credit on a conventional loan.
Yeah, I think FHA and VA loans are fantastic. I think they're great options for purchasers. And I think another misconception is I have to put down 20% to buy a house. Is that correct?
No, that's something that I think we see a lot of advertising. The banks, they like top tier clients, so that's what they are trying to attract. But the general population can actually qualify for programs as low as 3% down. With the conventional, if you're a first-time home buyer, there's 5% down programs, or FHA, you can do 3.5% down. And VA, you can go 0 down. So there are options with, low or no down payment.
Yeah, I think that's wonderful, to hear that I don't need to put down 20%, because I think that is a lot of the, what people think, right? I have to save up 20% in order to be able to buy a home, and that's just simply not true.
Yeah, what a lot of times people are overlooking is that they're so concerned about like private mortgage insurance, which they're not taking into account that if I put 5% down on a house or 3% down, they're looking at just the immediate equity that they have and not taking into account that, like, well, maybe if I paid the PMI for 2 or 3 years, the average, home goes up, 5, 6, 7% in equity, right? So compounding over a 2-3 year period of time, you could potentially get out of that private mortgage insurance without actually having to put a 20% down payment down.
John, I think that prices are just so high right now and interest rates are so high. Is it good for me to go in and buy maybe something that I can afford, that's a little bit less? Do you think that I'm going to appreciate on that? I heard you say 5 to 6% typically a year. So should I just, if I'm on the fence, should I jump into the real estate market and buy what I can? Do you think that's a good foot in the door?
Yeah, and I mean, I don't think anybody goes out and buys their dream home like
Out of
their
the
first
gate, day one?
No, this is not possible typically.
Yeah.
I mean, there are somebody,
Sure.
certain people that can, that come with a silver spoon in their mouth. But, for the average home buyer, myself, I mean, I bought a house that I could afford. And that led me to buying multiple houses over time, and I use the equity every time to move to the next house. And so that's how I was able to go from, say, like, a small condo to, a house with a pool, that my family can enjoy. So no, I don't think you have to buy, the Barbie dream house right away. It's got to be, something that you can afford, something that's manageable. Maybe you turn it into a rental, and keep the property. There's a lot of different paths that you can take. So again, that's where like us sitting down and figuring out what your goals are, figuring out what your real estate, truly what your potential is, could figure out
Where my dreams want to go.
Yeah.
Yeah. So if I'm wanting to do that, if I'm wanting to do what you did and, buy a house and then build up the equity in it and then sell it or keep it and then go to the next one. But let's say we want to sell it. How long do I have to hold that piece of property to make it the most beneficial for me?
So most loan programs require you to stay in the house at least 12 months as your primary residence. If you're looking at selling, there's some tax implications if you sell within a 2-year period of time. There's also some equity, requirements if you have too much, capital gains. So, those are things that we'd want to talk about as well. But 12 months minimum, you could live in the house and then move on to the next one. So I could turn that primary residence into a rental and keep doing that. I've had plenty of clients that have started off with a small house and, built themselves up into what they love to be as their family home now.
Yeah. We did something similar, bought houses, and fixed them up and sold them every couple of years and then ended up, eventually with a great piece of property. It was much different than the first one.
Yeah, I mean, sweat equity is a compounding effect. I mean, so as you live in the house and you do some upgrades, over time, and increase that value of the home while you're living there. I mean, you're getting a 2-for-1 deal basically at that point.
Now, tell me a little bit more about you. You were in Washington, just kind of to switch it a little bit here, more to that Mindstrength piece.
Yeah.
You were originally in Washington. How many years did you live in Washington before coming down to Arizona?
Yeah. So most recently, it was about 15 years. I'm originally from Arizona, so I have a lot of family ties down here, but had been in the Army and then got out and stayed in Washington. While we loved our time there, it was just something that we wanted to move back to a little bit sunnier accommodations. And, it was something for my family. It was like something that we really had to make a decision on. And like, is this the right move? We also had to look at, like the area, the great thing about being in Arizona now for us is that we have a lot of friends and family that, were in Washington that now live in Arizona. There's also a lot of, places that accommodate for Washington people, and then, so it was definitely something that we had to put a lot of thought into before we just kind of jumped into it.
And you believe you've been doing this for 23 years, which is a long, long time to be in the industry. You were in Washington for 15 before you moved down here.
Correct.
And was it was just to be closer to family or quality of life or all
it
of
was
the above?
a combination of a lot of different things. I mean, really, the amenities that we wanted to, again, I wanted to spend more time outside, while we love the beautiful green and the water in Washington. I mean, being able to be in Arizona and wear shorts and flip flops, most of the year was an attraction for us.
Now I know you still do business in Washington. You still
Correct.
run a
Yeah.
team up there, or
That's
run.
correct. Yeah.
Okay. Do you find that difficult to go in between the two, or does it seamless now, or were there any reservations in the beginning when you decided that you wanted to take on that
No, I
endeavor?
think with, there's a lot of connection between both states. I mean, we have, there's a lot of golf in Washington, and there's a lot of golf
Yeah.
down here. There's a lot of hiking in Washington, a lot of hiking down here. So there's a lot of things that, in both states that really, are complementary to each other. And then, with the people too, there's a lot of people in Washington that will come down here and visit or retire down here. So that made it a little bit easier because there was already connections that I had from Washington that were already here in Arizona, and vice versa. I mean, there's, it's helpful when you can talk to, agents that are in Washington, and the area, the landscape, I know the developments. So still doing business in Washington is helpful for us because, we have those long-standing connections, and then also being able to work with people here in Arizona. And sometimes we're getting to help people from, one state move to the other.
Do you find anybody? I know people from Washington come down to Arizona. Do you find anybody coming from Arizona going back up to Washington?
Not as often,
Not as often.
but it happens.
It happens. They want to go back up to the. I mean, Washington in the summer is. I'm from there too. It's gorgeous. I don't think there's a better place aesthetically. It's beautiful in the summertime. You have the lakes and the water and the mountains, and it's really a special place.
Well, I think that with the heat that we get here in the summertime, there's
What do you
definitely
mean? It doesn't get that hot here.
yeah, it's a dry heat, right? There's I think families that will like we send our kids up there to visit grandparents, and so that's I think a time that when it does heat up, it's like, okay, well, do I go to northern Arizona, or those that are from Washington, they'll go back and visit. So I've had friends that have moved down here to this be their primary, and then they end up turning around and buying an investment property maybe in Wenatchee or central Washington, or one of the islands, or on the peninsula, because then they have a second home. They can go see family, and they can escape the heat.
When you decided, and your family and you decided to make the move, from Washington down here, what do you think you needed in your mind to be able to go ahead and make that change? Were you fearful at all to come back down here?
No, I mean, one
Were
thing
you
was
worried
that,
about your business, or no?
oh, absolutely. I mean, I think that anybody that says that they don't take that into consideration is fooling themselves, because even though that I've been down here multiple times, and I have family here, and visited the area, till you live here, you really can't say that 100% everything is going to be successful. So it was something that we talked about, and I think that it was something that we were prepared for. It really took the mindset to say, I'm going in on this 100%, and without fail, I'm going to make it work. It's something that we really kind of talked about as a family, what the benefits were. I mean, we weighed out pros and cons. And then, once we really just kind of decided, it was, okay, what's the plan? How do we get the house sold? How do we, look for something when we move down here? So we really kind of started planning that out, a couple months in advance.
Have you had any challenges along the way in your 23 years?
Yeah. I mean, there's been some ups and downs. I mean, there's the market, shifts. I mean, that's the way real estate moves. It's a cycle that, comes every, 6-7 years. We've had a good 10-year run this last run, but, it can't always be great. So you just have to be prepared for that. And I think that, knowing that there's light at the end of the tunnel, that you have to just kind of do the work. Sometimes that might be 2-3 times harder that you're, putting some effort into something. But knowing that, like, at the end of the day, that, all the work that I'm putting in now is going to, pay off in the future. It's that delayed gratification. So you just develop habits. You just do the same thing, keep your head down and keep pushing forward. And then, I think if your mind is in the right place, that that the outcome is going to, get you to what your goals are, that you'll focus on that. And, there's days that people, I've taken steps backwards, but then I realize like, okay, it's just a temporary pain. I can move forward, and really kind of get back on track for that goal.
Do you have a routine that you do every day? Like, are you one of those people that get up at 5 a.m. and is that
I mean, I
you?
do and I don't. I mean, I'd say that I get up, I go to the gym, but I'm not, where like I'm cold plunging and
Yeah.
doing,
Not
some of
doing all
this stuff.
that.
I mean, my family is the most important thing to me. So, things happen with them, and I can't always just do what's about me first. So sometimes I have to make sure that I'm helping my wife with the kids, or doing something that family oriented first, and then my routine revolves around that. So my calendar, if you look at it, it's got my family stuff on there first, and then I plan my day
Very nice.
and my work schedule around that.
That's really nice. If you were to give some advice to a you 23 years ago, what would some of that advice be? What do you think the top couple points would be for that you 23 years ago?
I mean, first thing, don't be like, don't avoid risk. Like, I mean, that's the biggest thing I think is like, you have to take risk. You have to be able to put that self-confidence in that, knowing that, something that I'm going to do is going to work out. You learn by failure. And so, it's one of my coaches years ago said, fail forward, so I would definitely say, take opportunities, and if it doesn't work out, then just get back up, dust yourself off, and,
Keep going.
keep going. Yeah. Take that opportunity to learn. And then also the other thing is, find good mentors, find the people that, really truly, are somebody that can help you, and listen to them. That's the biggest thing I think that I would say to my younger self is, listen to the people that are investing in you.
Did you always?
Did I listen?
Yeah.
That's probably why I had setbacks, but, you don't always know, you don't always receive the information when it's given to you, right? It's, as they say, it's tough sometimes to know that what you may be doing isn't the right thing, and accepting that. So
I think I think you said it, having it be okay to fail, and learning from that. I think that's such a good thing to say, because I think a lot of people are worried about failing, and that really freaks them out, for lack of a better way of saying it. And that holds them back.
Well, I mean, I look at it as, like, look at a toddler, right? I mean, how many times does a toddler fall down before they walk? So I think that's one thing that happens to us as we get older in life is that we are so afraid to fall, or what other people might think of us if we do,
Sure.
that we don't take the risk and, fall down, 100 times before we learn how to take our first step.
Do you think you learn more in your failures than you do in your successes?
I definitely think so, because when you fail, you learn what not to do. Whereas if you're successful at doing something, you don't really learn a lot from it always, because it worked out.
Yeah, I think that's really true. Now, if we're looking at kind of to jump back over to the market a little bit right now, 2021, 2022, for the most part, were really good real estate years, right? Do you think 2023 is kind of the worst of it that we were going to see? Do you think we're out of that now, or are you with the camp of like?
Yeah, the challenge was is that the Fed waited too long to raise rates, and this has been something that economists have talked about a lot lately. Is that they probably should have had more movement in rates so that we would have had a softer landing. They moved rates at a fast pace that wasn't typical of what the government or the economy typically supports, and so that put a little bit of a the way that I would look at it is that it's like a roller coaster. I mean, it was kind of we were on this up and down, and then we hit the big hill. So, it causes, when you go up fast, there's a
Right.
fast, fall. So, I think that really kind of affected people, because they moved rates so fast. Um, people weren't really prepared for it, within the real estate industry
Right.
as well as just,
Yeah.
the general public.
And so somebody that just got into the industry last year, would you tell them to stick with it, hang in there? It's gonna get better.
Yeah, I mean, they have to have the mindset
Hmm.
that it's going to get better because, really, again, I mentioned that real estate moves in cycles.
Hmm.
So, anybody that's been able to survive this last year, they're going to see the benefits. I mean, there's been, you know, I don't know the exact number,
Right.
but there's been a lot of real estate agents who have gotten out of the market. There's been a lot of loan officers that have
Hmm.
gotten out of the market. So I think that the consumers, they really need some expertise, in their pathway to homeownership, and the real estate agents and the lenders that are around to help them. They're the ones that, have been able to make it through this, and, hopefully they've learned some things, what not to do,
Yeah.
so that, they can move forward with a better way to handle their business, moving forward over the next few years.
What do you think is the one like tool in your toolbox right now that would set you apart from somebody? What's the one piece of advice that you would give somebody just starting today? I know we kind of touched on it, but
I mean, just, like, they have to learn how to, not only just understand guidelines, around loans, but they have to learn how to form great
yeah.
relationships. I think relationships will help in any situation. If you have great relationships, that helps with business. It helps with, getting questions answered. It helps with solving problems. So, form great relationships, learn how to network,
Get a mentor.
definitely get a mentor, and be authentic.
Yeah.
Like, I mean, there's, if you can't truly get people to like who you are and trust who you are, and show them that, like, you're caring about who they are, you'll have challenges.
Provide them with value and be authentic.
Absolutely.
I just want to say thank you so much for coming on today. I think it's so valuable for people to see, what you've done. You've changed markets. You've come from Washington to Arizona. You still work both. And I know there's other people out there that are wanting to do the same thing. So I just think it's so valuable for them to see you be successful at it. I'm so excited that you were our inaugural guest. I appreciate your time.
Well, I appreciate you inviting me on. It's been great. I wish you much success with this.
Well, thank you. I hope to have you on again as a guest
I look
in the
forward to
future.
coming back.